Good afternoon, everyone. Hey guys, this is Bruce Marshall with Simpler Trading doing the nightly market update for Wednesday, May the 4th, which is the Fed day. You can see on the screen we've got a crazy move today. If you were watching the market, it was pretty insane. We'll talk about that in a second. But, I want to talk about the market, kind of where we are now. We continue to be in very treacherous waters because until the last hour or two of the day today, we were in very close to the ledge as far as rolling over into some much deeper downside, and we had a bounce. So is this bounce going to continue or not? And that's what I want to talk about today. Let me move this out of the way. This is the ES right here, which is our most broad representation of the market. And if you were trading this today, again, you know that this was really crazy. So our low on the day, the black, is today. And the low on the day is 41.42, and we ended at 43, or near the end of the day was 43.03, the high on the day. So low to high, that is 164 points, if my math is correct. 164 point move one way. Right? That is an insane move. The expected move on the day was 55 points, and that was elevated because the volatility of a Fed announcement. Now, the Fed had the announcement right here. And so, as usual, the market kind of chops back and forth. Pretty wild swings, chop back and forth, chopping back and forth. And this, you see that is 3:30 Eastern. So that's when, 2:30. That is when Powell gave a press conference. And we got this face-ripping, short-covering rally here on something that I didn't even think was that relevant. The one thing that he said, so Bullard said, and I believe it was kind of an offhanded remark, that they would consider a 75 basis point rate hike. We know they've been saying they're going to raise rates. We're going to get a hold of this inflation, even after they told us inflation was not a problem for a year or more. Now we're going to get in front of this inflation, and we're going to raise interest rates to slow it down, all that kind of stuff, right? Well, 75 basis points is 3/4 of a point. They raised 50 basis points, which is 0.5%, right? And Powell said that 75 basis points, at least for now, is off the table, and until they evaluate more data, which could come in tomorrow, Friday, next week, all that kind of stuff, and then it might be back on the table. But the market just did a wild rip higher, and a lot of that is driven by short covering. It is this is FOMO, this is short covering, so people have stops at all these levels, and if it gets up here, I'm going to close this position. You have to buy it back, and you're short covering, and it just continues to drive it. The higher it goes, the more stops it hits. Here's a big level, here's a big level. There's levels all in between here, and as those levels are hit, shorts continue to be squeezed. You hear this all the time. Short squeeze. Well, that's what happened, right? And it can happen on the downside as well, but it happened on the upside. I don't think there's a lot of validity to this move today, but it is what it is. And so we'll take this. Hold that thought for a minute. We'll take this and we'll go back out on a little bit longer time frame, and I'll show you why. And keep this in mind too. So today was Fed meeting. Tuesday was JOLTS, and the JOLTS report came out. Horrible numbers, really bad numbers. That's job openings and labor turnover statistics or survey, I believe. Really bad numbers there. And Friday, we've got non-farm payrolls, and the biggie next week is CPI, which is inflation. That's going to be the biggie to see if inflation is going to continue higher, or if it's pauses, or if it's turning down, that kind of thing. I firmly believe it'll continue higher. I haven't seen any reason to think things are going to slow down here on the normal consumer end, right? But anyway, so let's go out here to a little bit longer time frame. And again, this is the ES. So what I was talking about down here, you see that red level, that's the voodoo fire line. When you get down there, if you break that, that opens the trap door to much more downside. We bounce vertically straight off this, and guess what? There you go again. We're bouncing straight up off this. But we're hitting this level here, which, let me see if I can zoom in a little bit. We could fail from this level. We failed twice before. There. We'd fail from here, or we keep going. And I don't know. And there's another big level of resistance. I had a lot of levels of resistance, and we went right through them today. Fib levels, voodoo lines, all that kind of stuff, right? So if this pattern were to play out in the kind of the wild swing scenario that we've been having, it's very possible we could come all the way back up to this level. This was over a 500 point move in, I think it was, I don't know, week and a half or 2 weeks or something like that. Very, very short period of time. Absolutely can happen again, so don't rule that out. But at the same time, am I buying everything I can to try to, get long here? Absolutely not. The higher we go, the more I'm going to want to short this thing back down, because I think we do come back down here, and I do think we take this thing out, probably. Let's look. So if we go out here on a 1 year chart, again, you can kind of see where we are. This is ES. The critical, Friday will be a critical number. Next Wednesday is when CPI comes out. That'll be a critical number. And then, we'll have the next Fed meeting and all that kind of stuff. And again, this rally today, I'm scratching my head because to say that, we're not going to do 75 basis points, we're going to do 50 for the next couple of meetings, meaning 2, 3, open-ended to the end of the year, whatever it takes, we're going to do it, right? To me, that's splitting hairs. That's not really a meaningful statement. We're going to take 75 basis points off the table until we see more data come in, and then we'll reevaluate it. So we may put 75 back on the table, so again, it is what it is if you're trying to make heads or tails of this. And I'm not super bearish here. It doesn't really matter that much to me because I trade both ways, short and long, and I do range bound kind of stuff anyway, and I trade this volatility. So this is good for me. I'm making money. This is a good market. It's baffling when you get a 3 times the expected move off something that's not really that critical, right? So anyway, that's the nature of the market. That's the nature of short covering. That's just the way it works, right? But if you were long, high five. I had a 4,200 broken wing butterfly up here. that was great, and I did a broken wing, so I had no risk on the upside. But I did a 4,200. We ended up going to 4,300, 100 points higher than I was expecting. Pretty crazy stuff. And I did a broken wing by design for the possibility that this might happen. I just didn't know that it would be this extreme. So the bottom line here is be very careful here. I think you could, if this thing continues, and we'll know in the next 3, 4, 5 days if this continues, ride it while you can. Be aware of these levels that we are likely to at least pause, like here, we paused a couple times, but this thing could keep going. But the higher it goes, again, the more I'm going to try to bring it back down here. There's just the first of the years right here, this is just totally unpredictable kind of stuff. So you have to do this stuff on really tight time frames and trade it more than this is not a buy and hold investment kind of market. And I'm not even seeing a lot of, bargain stocks out there. Now there will be, you look back and you go, oh, I should have bought this when we were down here, if we keep going. But at the same time, you could be holding a stock and then we take this thing out. If Powell would have said 1 or 2 wrong words and we're 150 points lower, it's a completely different story, right? So be careful out there. That's the main thing. And again, this is a very tradable market. I'm trading the volatility and it's working great, but it's very frustrating because you have to be on your toes constantly and evaluate these turns up or down, almost constantly. I mean, intraday, these giant swings we've been having. Again, let me show you this real quick. 10-day chart here. These are big swings each and every day. Straight up, straight down, straight up, straight down, straight up, straight down, straight up. That kind of stuff. So, anyway, keep an eye on these levels. Keep an eye on Friday. We have payrolls. Keep an eye on next week. We have CPI. That'll be the biggie, probably the next biggie that's coming up. And we'll see what happens. We'll see what happens tomorrow after the market digests this big, giant move we had today. So I hope that helps. Keep some powder dry. Be careful, trading this market, but don't avoid it. It's still tradable and it's still easy to make money. Just you got to get in the right direction, right? So I hope that helps. Hope it makes sense. Come join us in the trading rooms, and we will go through this in real time with real money, and in the main room or the bias room, either one. And hope I see you in there. Hope you join us in there. So thanks for the time. I appreciate it, and I'll talk to you soon. Take care. Thanks.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me